everyone. On behalf of Hindalco Industries Ltd, I welcome all the participants to the earnings call for third quarter fiscal 2017-18. On this call, we will be referring to the presentation that is available on our website. Some of the information on the call may be forward-looking in nature and will be covered by the safe harbor language on the slide 2 of the presentation. On this call, we have with us Mr. Satish Pai, our Managing Director, along with Mr. Praveen Maheshwari, our Chief Financial Officer, and Mr. J.C. Ladda, Head of Copper Business. Now, let me turn the call over to Mr. Pai.
Thank you, Abhishek. Good evening or morning, everyone. Welcome to the third quarter fiscal year 17-18 earnings call for Hindalco Industries Ltd. Now, moving on to slide 3, I will start by giving you the key highlights of the company performance, including the business results. This will be followed by an update on macroeconomic and industrial environment and highlights of the results. Later, I'll be covering operating performance for all our segments in more details, and Praveen will elaborate on the financial performance. Let me start with key highlights, starting with slide 5. Hindalco delivered a record EBITDA of 1,611 crores in Q3FY18, up by 15%, driven by stable operations and favorable commodity prices in both businesses. Earnings before tax and exceptional items grew 62% to rupees 746 crores. Consequent upon our prepayment of project loans and also repricing of these loans, interest expenses reduced by around rupees 100 crore compared to last year. Net profit for Q3 FY18 was at 376 crores versus 321 crore in the previous year. This was after considering a provision for rupees 115 crore based on a judgment of the Honorable Supreme Court on mining regulations. Utkal Alumina recorded a significant jump in EBITDA by 73% to 247 crore in Q3 FY18, and with net profits of rupees 118 crore as compared to a net loss of 55 crore in Q3 FY17. The aluminium business performance reflects consistent track record of solid performance. All the plants operated at near full capacities and at design operating efficiencies. Enhanced level of aluminium prices in the LME has further improved the results. The business faced headwinds in the form of oversupplied domestic market and surging input costs, especially of alumina, carbon products, and caustic. Although higher alumina price is negative for the standalone operations, the same is neutralized in the form of higher EBITDA at Utkal. Increase in electricity duty in Odisha also impacted the business. There has also been an increase in notified price of coal by 11% effective January 2018, which will have an impact in the coming quarters. Despite these headwinds, standalone aluminium business EBITDA was up by 7% at rupees 940 crore on the back of supporting macros and higher volumes. Moving to slide 6, our copper business significantly benefited due to higher volumes, sulfuric acid prices, and better macros. Lower TCRC and lower DAP volumes impacted the results adversely. Despite this, the copper business posted a 28% growth in EBITDA at rupees 421 crores. We sold 41 KT of copper rod in Q3 FY18 as against 35 KT in the previous year on improving market conditions. Novelis delivered a record performance with highest ever adjusted EBITDA of $305 million, up 20% year on year. Shipments increased to 796 KT, up 6% year on year. Automotive shipments increased by 12%. We are seeing signs of improvement in can demand in Asia and South America. Novelis has recently announced its plans to expand its production footprint in the US with an approximately $300 million investment in automotive finishing capacity in Kentucky. Novelis has also agreed to acquire the operating facilities and manufacturing assets for euro 200 million at its CAS Switzerland plant that have historically been leased. Novelis reported net income of $121 million in Q3 FY18 compared to $63 million in the previous year. Let us now look at the broader economic environment in slide 8. The global growth momentum increased in the third quarter of calendar year 2017, mainly driven by increase in investment and manufacturing activities. According to the IMF, around 120 countries registered growth in the first 9 months of calendar year 2017 as compared to the corresponding period in the previous year. World economy is witnessing this collective recovery in economic growth after 2010. In advanced economies, US, Japan, Germany and Korea, and in the emerging markets, Brazil, China and South Africa registered better than expected growth in 2017. The global economic growth is expected to touch 3.7% in the calendar year 2017 as compared to 3.2% in 2016. Going forward, the IMF expects the growth will continue to move upwards and likely to grow by 3.9% in 2018 and 19 respectively. Indian economic growth made a comeback in Q2FY18 at 6.3% after hitting a 3-year low of 5.7 in the previous quarter. The leading indicators for Q3 this year are positive. Manufacturing PMI touched 5-year high of 54.7 in December 2017, and the index of industrial production rose to a 17-month high of 8.4% in November 2017. The economic survey indicated expected GDP at 6.7% this year and 7 to 7.5% next year. Thus, the growth momentum looks positive both globally and in India. However, elevated crude prices could impede growth and stoke inflation. Turning to the aluminium industry update on slide 9. Aluminium demand growth in China moderated to around 6% year-on-year as compared to a growth of around 8% in calendar year 2016. Moderation in demand was mainly driven by slower growth in building and construction and electrical sectors in China. But in the world outside China, demand grew by 4% in calendar year 2017 against a growth of 2.5% in 2016. North America, Europe and Brazil showed strong recovery in demand. Building and construction, auto and industrial sectors were the key drivers. On the supply side, despite reforms in China, production grew by 13% year-on-year to 36.3 million tons in 2017 against a modest growth of 4% in 2016. Production outside China faced disruptions in 2017. As a result, it grew by 1% to 27.2 million tons in 2017 from a growth of 2.4% in 2016. The global market in 2017 was largely balanced as compared to a deficit of around 1.1 million tons in 2016. The Chinese market recorded a surplus of around 2 million tons in 2017, whereas the world outside China remained in a deficit of around 2 million tons. In slide number 10, we will discuss about the aluminium industry drivers and factors which affected the industry in Q3FY18. LME in Q3FY18 grew by 4% over the previous quarter and 23% year-on-year on the back of Chinese environmental reforms. However, for domestic players, elevated rupee against US dollar in Q3FY18, rupee at 64.7 negated the impact as compared to previous year's rupee value of 67.4. In Q3FY18, the Japanese MJP premium reported a significant jump of 27% year-on-year to US dollar 95 per ton compared to US dollar 75 per ton in Q3 of FY17. On the domestic front, demand from user industries continued to show signs of improvement. However, domestic players are facing stiff competition due to oversupply in the market. Slide 11 captures the state of the copper industry and the major external value drivers of the copper business. The concentrate market recorded a marginal deficit of around 92 KT due to major disruptions that happened at the world's two biggest mine, Escondida in Chile due to labor negotiations and Grasberg in Indonesia due to change in government regulations on export of concentrate. Concentrate demand is estimated to increase in 2018, but supplies are expected to be tight, and the risk of disruptions may arise from major labor negotiations in Chile and Peru. Consequently, deficit in the concentrate market may widen further in 2018. Adverse concentrate market impacted the TCRC for calendar year 2018. It has declined around 11% to $82.25/8.225 cents in 2018 as against $92.5/9.25 cents in 2017. But Codelco has increased its cathode premium for the European market from a 7-year low of $82 per ton in calendar year 2017 to $88 per ton for 2018. Cathode premiums for the Chinese market also witnessed an increase from $72 per ton in 2017 to $75 per ton in 2018. In the domestic market, demand from user industries has shown positive trends as compared to previous years, but low-cost imports from FTA countries continue to be a matter of concern for the domestic players. Let's now turn to the operating performance of the aluminium business in India on slide 13. Aluminium operations continue to operate close to design capacity. During the quarter, metal production was 323 KT. Alumina production is lower by 10 KT due to certain operational issues at Renukoot. Value-added products is our focus area, and during the quarter, the production of VAP, including wire rod, grew by 3% over the previous year. Against the total metal production of 323 KT in Q3FY18, sales in all forms was at 325 KT. Moving to the operating performance of the copper business in slide 15. In Q3FY18, production of cathodes was 101 KT, up 8% compared to last year when we had a shutdown in one of the smelters. DAP production was lower at 57 KT, down 21% due to operational issues. It is expected to ramp up by Q1 of FY19. CCR production stood at 38 KT, up 18% on improving market conditions. The new CCR project is progressing well as scheduled, and commercial production is expected in Q4 of FY18. Total copper sales for the quarter was at 102 KT. I will now cover the operational performance of Novelis in brief. Many of you have already heard the Novelis earnings call yesterday. Coming to slide 17, total FRP shipments at 796 KT grew by 6%, largely due to a 12% increase in automotive shipments. Our focus across key metrics of recovery, metal mix, increased recycling, customer satisfaction and quality have helped us drive these strong results. We achieved highest ever EBITDA per ton of $383 in this quarter. With that, I would now like to turn the call over to Praveen for a more detailed review of our financials.
Thanks, Satish. Coming to slide 19, higher rupee LME prices of both aluminum and copper and higher volumes in both the segments boosted the overall sales. As you may be aware, the revenue numbers are not comparable on year-on-year basis, as post-GST, the sales numbers have been reported net of GST. EBITDA increased by 15% over the previous year on the back of stronger commodity prices and volumes. Other income also rose to 250 crores. As compared to the previous year, interest expense was lower by 18% due to prepayment and repricing of long-term loans. The average cost of long-term borrowing reduced from 9.25% in Q3 FY17 to 8.76% in Q3 FY18. Earnings before tax, exceptional items for the quarter stood at 746 crores, up 62% as compared to previous year due to strong overall business performance and savings in interest outgo. Net profit stood at 376 crores. The net profit for the current quarter factors in exceptional items of provisioning of rupees 115 crores based on a judgment of the Honorable Supreme Court on mining regulations. Moving to slide 20 on financial performance of aluminum business. Higher metal realization, volumes and stable operations resulted in higher EBITDA. Despite significant increase in carbon and caustic prices and a huge increase in electricity duty from Q1 of this year, aluminum business delivered a strong EBITDA of rupees 940 crores in Q3FY18. This is about 7% higher than last year. Coming to the financial performance of Utkal Alumina in slide 22, year-on-year EBITDA rose by 73% due to higher alumina realization. As you know, Utkal is a 100% subsidiary of Hindalco and a captive supplier of alumina to Hindalco. Since alumina is transferred by Utkal to Hindalco at market prices, higher alumina prices result in higher costs in the standalone financials, but a higher profit for Utkal. Accordingly, net profit of Utkal was 118 crores in this quarter compared to a loss of 55 crores last year. Now coming to the financial performance of copper segment on slide 22, higher rupee LME, volumes and byproducts boosted copper business revenues to 5,701 crore. Copper sales quantity was also higher at 102 KT versus 97 KT in Q3 FY17. These factors resulted in a stronger year-on-year EBITDA growth of 28%. I will now take you through the financial highlights of Novelis for this quarter. The results are given on slide 23. Net sales increased 33% to $3 billion, driven by higher total shipments and higher average aluminum prices. Adjusted EBITDA at $305 million is up 20%, mainly on the back of higher shipments, operational efficiencies, favorable metal mix, and higher scrap spreads. With this, let me hand it over to Satish for his closing remarks.
Stable manufacturing performance and favorable commodity prices resulted in robust financial performance across Hindalco. The outstanding results are despite sharp increase in input costs and an oversupplied market situation. We have already repaid long-term loans close to 8,000 crores, including 2,300 crores at Utkal in the current year. This has led to significant savings in the finance cost and also improved the leverage. With a strong balance sheet, we are now in a better position to focus on low capex, high return proposals such as the Utkal expansion and various downstream projects that I have spoken of before. We maintain a very positive view of the growing demand for automotive aluminium sheet globally, with growing demand for electric and hybrid vehicles, and we aim to reinforce our market leadership position by adding capacity to meet customer demand. Buoyant demand and strong market recovery across business in India also augurs well for our Indian operations. We are also keeping a close watch on input cost movement as this may impact performance. Thank you very much for your attention, and we will now open up for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Yeah, thank you very much. My first question is on the coal cost trends. How much of coal cost inflation did we see in the December quarter? And given what we have seen on Coal India increasing coal prices, broadly, how would that impact cost of production for aluminum for the March quarter?
So the interesting thing is from Q2 to Q3, our coal cost actually on a rupees per million kilocalorie basis was slightly lower. And they were slightly lower because if you remember in the Q2 quarter, the linkage deliveries were not that good. Most of it was being diverted to power plants. So our linkage percentage went up in Q3, and hence Q3 coal costs were actually quite benign. Now, the 11% increase that has gone up in January, what that means is that it's going to be leading to, along with that 50 rupees per ton handling cost that they have done, about rupees 50 per million kilocal is the net impact. So all I can tell you is from an annualized basis for the whole year, that's about a 300 crore impact on us going forward for the whole year.
Okay, so 300 crores on basically 1.3 million tons of coal production, sir.
No, 1.3 million tons of aluminium production.
1.3 million tons of aluminum production.
That's
so that should be the broadly impact, and some of it will flow through in the so from March quarter onwards, around $35-40 per ton of cost increase we should see for the aluminum COP.
So you see, let's talk about the aluminium COP, because the aluminium COP Q1 to Q2 was flat. Q2 to Q3 it went up about 3%. And now I expect Q3 to Q4 for it to go up another 2 to 3% because of coal and carbon prices. So that's the sort of order of magnitude. Year on year, we have seen about 6 to 7% because I'm talking on a fully integrated basis.
Understood.
The alumina, which has been a huge increase, we are actually not seeing that impact. So all I'm seeing is carbon and the coal from January onwards. So that's why our actually operating performance and cost control is helping keep our COP at a much better level.
Understood, sir. And so secondly, if we look at the total alumina production and the Utkal alumina production, the alumina production at the Hindalco standalone entity level is totaling around 358,000 tons, which seems to be at a multi-quarter high, sir. Now, just trying to understand, sir, what has driven this increase in alumina production? Is it become more economical given the increase in global alumina prices and hence the trade-off, or are there any specific factors or at the manufacturing level driving the higher production?
Sorry? Sorry, the Q3 production of alumina was 734 KT. And your question was in Q2 it was 712.
So basically, if you take away the Utkal alumina production, the standalone Hindalco alumina production seems to be 358 KT versus 332 KT in 2Q.
So maybe I can take that one. See, Q2 our production in the older plants was a little lower. Certain operational issues which are not there in Q3.
So normally in Q2 Muri takes a shutdown because of the peak summer, the water gets less. So we keep our maintenance programs during the summer period in Muri and Renukut.
Understood. Thank you very much.
And just because Renukut also in Q3 had a little bit of issues. That's why if you see Q3 17 to Q3, Renukut was slightly off, which is now stabilized and will pick back up in Q4.
So is this the peak production at ex Utkal? I mean 358 KT roughly works out around 1.45 million tons for Hindalco standalone, or can this increase further?
It can increase because it's directly proportional to the quality of bauxite. So currently we are going through a little bit of disruptions in Jharkhand because with this common costing, some mines working, some mines not working. So the mix I'm not being able to optimize. So if you can get an optimized mix where your total alumina content is around 38 to 40%, then you can produce more alumina for the same volume of bauxite.
Understood. Thank you very much, sir.
Thanks, Pinakin.
Thank you. The next question is from the line of Anuj Singla from Bank of America Merrill Lynch. Please go ahead.
Yeah, thank you very much for the opportunity, sir. So my question relates to the hedging volumes for fourth quarter. What is the volumes we should be expecting which are hedged, and what is the price? You mentioned, I remember you mentioned around $2,000 in the earlier conference call. Is that the level we should be expecting for the fourth quarter as well?
The fourth quarter is slightly higher. The percentage is still around 50%. But of course, every quarter you go, the hedged value goes up slightly. But So the question really is, the hedging volume impact in Q4 will really depend on LME. In Q3 it was at 2100, Q4 will be looks like right now at 2200. And we are, as you remember quite correctly, we are hedged at around 2000.
$1,000. Okay. And sir, we still continue with our hedging policy, which, on a rolling basis. So we continue to hedge our volumes for the next year as well at whatever the prevailing LME prices are, or is there a change in strategy on that?
No, in fact, similar question from last call as well. So Q1 of next year, we are about 28% hedged. We have not done too much more, but the values for Q1 are already at the 2200 type of LME.
Okay, and the quarters after that, sir, nothing. Nothing.
No, next year we are roughly at about 28% hedged on a increasing curve of aluminium prices.
Okay. So 28% for the full year, but the LME price from 2000 it will go up to 2200, the hedge price.
But basically on a rupee LME basis, it's quite high because the rupee is hedged at a much higher level.
Right. Okay, and sir, the 2 to 3% increase on a QQ basis for the fourth quarter. So, sir, that will roughly translate into maybe $20 to $25 kind of increase, or is my assessment correct, or it's going to be?
Yeah, you're correct. 2025, yes. The big thing for me will be the spot caustic prices are already dropping. So it really depends on how the caustic and the CP coke pitch play out. But that's the right order of magnitude you have taken.
And on the sir, copper business side, given that we will have the forces of one is declining TCRC and the second is maybe higher DAP production going into the fourth quarter. So what kind of profitability level should we be expecting going into fourth quarter?
I think we should be sort of flattish with Q3.
Okay. Thank you very much, sir.
Yeah, thanks.
Thank you. The next question is from the line of Sumangal Nevatia from Macquarie. Please go ahead.
Yeah, thanks for the chance. First question on the aluminium VAP division. Now we are consistently at around 120-125 KT per quarter. So in the next 1 to 2 years, what sort of volume increase can we have in this division, given overall volumes for aluminium should remain flat?
So that's the whole game plan for us, is to double our downstream over the next 5 years. So next year itself, you will see the whole Hirakud ramp up and the Mauda ramp up. So you should see, I think, about 40-50 KT increase in the VAP next year. And then we are starting to do our capex plans to increase the downstream capacity on extrusions, foil. So those will take, every year you will start to see it go up. But next year you should see about at least 40 KT because Blue Fox will be completely ramped up, Mauda foil will be completely ramped up. So that's from a volume point of view, but I also want to make the point that we are also upgrading the mix. So from completely low value VAP, just hot roll coil that you talk about, we are moving towards higher EBITDA per ton products.
Is it possible to share what could be the blended benefit on the margin level?
So I think on the margin level, blended, I would go something like $70-80 a ton.
Okay, understood.
Our ultimate goal, which I've said quite often is to reach $150 a ton EBITDA on our downstream portfolio.
Understood. Okay. Next question, sir. With respect to the Utkal refinery expansion, in between there were articles with regards to environment clearance. Are we in a position to share some more details in that?
All I can say is that we have all the necessary clearances. Already the pre-engineering work has started and we are on our way for the expansion.
And this is from 1.5 to 3 million tons?
No. 1.5 to 2 million tons. This is the brownfield expansion. 1,300 crores.
Understood. Understood. Okay. Just one last question. You mentioned about the cost inflation with regards to coal, given the price hike by Coal India.
Yeah.
Also, they are moving to a new pricing policy on kilocalorie basis rather than grade basis.
Yes.
So, I mean, there are various news articles that could result in lower prices. Any views on this area?
So look, it's true that if we actually got the coal that we have contracted for, our price per million kilocalorie will be lower.
Okay.
So normally we do get quite a lot of grade slippage when we get the coal delivered. So we are completely with Coal India, and if they can increase their, I don't want them to increase, if they can give us the quality we have contracted, of course our coal costs will go down. It will more than negate this 50 rupees per million kilocal that I just mentioned.
But we are not doing any third-party sampling currently?
There is, on the Coal India side, they have started to do third-party sampling now. In fact, just started in the western coal fields, I think in Q3.
Okay, okay. All right, thanks and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Rajesh Lachani from HSBC. Please go ahead.
Yeah, thanks for the opportunity. So, two questions from my side. One is regarding this TCRC. They are down for 2018. So, is this an annual contract for 2018?
Yeah, I'll just pass it to Laddaji.
Generally, the TCRCs are declared on an annual basis, and these are negotiated between Chinese smelters and the miners. And generally, they declare this for the next year sometime in December or Jan. So for the 2018, it is lower by 11%.
So for the entire year, this is lower, right?
Right, Jan to December.
Okay. And sir, regarding one question on Novelis, if I may.
Yeah.
So we are expanding our capacities in US.
Yeah.
So just trying to understand what is our automotive capacity across regions now, and how much capacity increase will happen. So it's 200 KT, but what would be the share of the capacity now and once we increase the automotive share for Novelis?
So I think in North America, our auto capacity currently is 350 KT. So we will add 200 KT with the the Guthrie expansion. In Europe, it's another 350 KT, and in 100 KT is in China. So we have about 800 KT of auto capacity in Novelis, and we have just announced the 200 KT expansion in the US.
Okay. Sir, so currently we have close to 150 KT quarterly production, which takes us to 600 KT. Isn't our capacity utilization lower? Because I was assuming our capacity utilizations are very high in US and Europe both.
The US is pretty full up, but in Europe we still have about 30 KT more that we are actually selling, and in China the full ramp up will be completed in March 18. If you remember the China Tiger line, it just started about 12 to 14 months ago. So we are not fully ramped up there. So that will happen by March 18.
So sir, what is the capacity utilizations in Europe and China for automotive sheets?
In Europe it will be about 80-85% probably, if I take the 30 KT that is still there. And in China we have now just hit on a run rate, I think 60 KT or 55 in Q3, and we will be at a run rate of 80 to 90 by March 18.
Okay, sir. And sir, this Switzerland facility, what's the capacity there that we have acquired?
So Switzerland capacity, by the way, we have been running this plant ever since we acquired Novelis. The only problem was it was under the terms of when we bought it, it was a leased facility. So it's a hot mill, cold mill capacity. So if you look at its auto capacity, the auto capacity in Sierre is about 100. But the hot mill of Sierre provides more or less the total 350 KT cold roll coil that goes to Naxterstad as well. So the hot rolling of CAIR provides the coil for all the auto in Europe, mostly.
Understood, sir. Thanks for answering my question, sir.
Yeah, thank you.
Thank you. The next question is from the line of Ashish Jain from Morgan Stanley. Please go ahead.
Hi, sir. Thanks for taking the question. So my question is again, going back to the coal cost. If I got it right, you were saying that with the grade slippage which is currently happening, will all the impact be reversed for you, or the 50 rupee impact that is there?
No. With the coal that we are getting today, the price increase has an impact of an additional 50 rupees per million kilocal. The question that was asked to me is that, Coal India is working on third-party sampling and trying to get the coal quality improved. I said that if I can get the coal quality that I have contracted for, it more than negates this 50 rupees increase.
Okay. So for that,
I'm not jumping up and down my chair that that's going to happen so quickly.
Yeah, so that was my question. So are we already doing some third-party sampling at our end also?
We have always been doing sampling. The problem is that it has to be done by a third party approved by Coal India, and it has to be accepted by them. Our third party is always doing it, so we know what we are getting. So in fact, when we buy, we do our calculation based on, it's a mine by mine. We know all the mines. We know what quality we can get from the mine.
Okay. Got it. That's all, sir. Thank you so much.
Yeah, thank you.
Thank you. The next question is from the line of Nitesh Jain from Axis Capital. Please go ahead.
Sir, you spoke about the cost increase in the aluminum business.
Yeah.
But my question was on the alumina side. So on the Utkal front, what is the cost increase because of this very high caustic soda price? And this caustic soda price is changing now direction-wise. Is it going down, or it is settled at higher level? This is point number one. And question two is, if you can share the aluminum industry and copper industry demand growth for Q3 for India.
Yeah. So the Q3 was the bright spot. I'll answer your second question first from a demand growth point of view. So the aluminium grew 10% quarter on quarter, and the aluminium grew, I think, aluminium grew 10 and copper grew 6, I think. Yes. It's the other way round. Copper grew 10% and aluminium grew 6% Q3 to Q3.
So basically, this is on the year-on-year basis.
This is on a year-on-year basis.
Okay.
But I'm giving you, this is on a year-on-year on the quarter basis. Now, if I look at a year-to-date basis,
okay.
If I do year-to-date, year-on-year, copper is still in a degrowth of about -5%, and aluminium is about 6% growth. I mean, honestly, most of the growth has come in this quarter 3. And that's what's making us a little bit hopeful. January has also been very strong. So we are hoping that post GST, the market growth, especially in the electrical sector, consumption-wise, and the packaging sector has started to pick up. Okay.
Sir, this is, just to, go a little bit more on this, nothing specific to Hindalco, but looking at the, kind of infrastructure work that the government is talking about, the roads and everything, and the electrification that they are achieving, it is very hard to believe that the copper, being a very basic commodity, YTD demand growth is -5%. I track cement as well, and in cement also we are not witnessing any, any great demand growth. So, what is your opinion, like why such basic commodities are having, the growth rate which is much lower than China, and China is being on such a great size?
It's a good point, and I think really what has happened is the GST was a very important event. And I think that, pre and post GST, there has been quite a lot of destocking for various reasons that you know. And I think that's why that the actual demand cycle, and it's reflected in the economic growth of the country as well. I mean, Q2 at 5.57 was the lowest in the last 13 quarters. That growth has just started to pick up in Q3. So we are now hoping that, especially with this new budget and its renewed emphasis on the infrastructure, and the GDP numbers picking up, because that's the reality. We hope that this growth that we are seeing now will be sustained.
Sure.
But during that Q2, early Q3 period, there was a lot of impact with the GST, destocking, various reasons where both, I think all metals demand actually did not do well, and the economic growth was also quite low, as you well know.
Sure, sir. And secondly, on the caustic soda and the
Caustic
aluminum.
soda, look, Q2 to Q3, my cost of production of alumina went up by about 1,000 rupees.
Okay.
So, in the big scheme of things, Utkal still remains very cost effective and low at around $150 a ton. But that was the impact of the caustic along with certain transportation issues. So in Q4 now, the spot prices of caustic have already started to come down. So roughly we should be around the 10,500 rupees per ton type of COP there.
Fantastic, sir. Thank you very much, Mr. Pai.
Yeah.
Thank you. The next question is on the line of Bhaskar Basu from Jefferies. Please go ahead.
Yeah, thanks for taking the call. Couple of questions. Firstly, on the hedges, if you could just give us some color on the hedge impact this quarter. I mean, in terms of what price were the hedge at, and what kind of quantity or the total impact from the aluminum hedges?
So just to be consistent, because I think you guys have modeled it quite well. As I said, at $2,000 LME, we are break even. So I think you can just do the math of the impact on Q3.
Okay. And the currency, because the currency is the other leg to this hedge. So
I'm giving you